Welcome back. I'm Pratap here. Today is the 5th March 2025. In this video, let us evaluate the performance of high liquidity zones generated in our previous end of the day report. Before that, all of you please note we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over $8,000. It is a highly expensive training program, but we are providing complete free training and all the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community in place of Posts. Click on the Community tab. You get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are in supply demand zone price action course YouTube playlist. I kept all the training lessons in this playlist, including all the advanced strategies I developed. They are all available in this playlist. You need to start your training from lesson 1.1 that is available at the bottom of the page. Scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and learn these concepts according to my training instructions provided at our Telegram channel. I provided the link to our Telegram channel in this video description. So please join at our Telegram channel. At Telegram channel pinned messages, you can find at the top of the window, Telegram channel window, pinned messages. Click on the pinned messages. There I provided all the training instructions. Learn the course according to my training instructions. That is very important. And if you follow the training instructions and learn the course, you will become a very good independent trader in the coming months. So please make use of this opportunity. Now let's get into the analysis of our high liquidity zones generated in the previous end of the day report. So yesterday end of the day report, we identified 7 high liquidity zones. We got 2 trades from these 7 stocks. And even before that, look into Nifty. Did you understand the power of the Pierce zone strategies we learned in lesson 28? See what happened in Nifty? See, yesterday from the Pierce zone, 75 minutes Pierce, the 75 minutes new order flow inside weekly Pierce zone. Prices entered. We have a fine-tuned 5-minute zone in that newly created 75-minute zone within the Pierce zone. See, yesterday we have seen 100 moves. That is what we discussed. And today it gave another 250 points move. Probably so far we captured 350 points. This is what you should understand. Probably in the next maybe 15 minutes high liquidity zone, till there probably prices will reach again, prices may come down. If the 15 minutes or 5 minutes high liquidity supply zones, one of them probably will push the market again down. In case if they are violated, again rally will continue for some more points until the next high liquidity zone. But meanwhile, intraday traders captured 100 points yesterday. Maybe short-term traders would have captured so far 350 points. Maybe some more points, maybe tomorrow. After that, prices may come down. In case if the prices are coming, if this is violated, below we have one more fine-tuned zone within the Pierce zone strategies. Institutions created 2 order flows within the Pierce zone strategy. So please listen. January 14th monthly demand zone detailed analysis we did. If you look into that video, you will find all the order flows in that particular monthly demand zone. Okay, now let's get into our high liquidity zone analysis. The one we got a trade, first one is Max Health. And this is a daily high liquidity supply zone. How our software identified this zone? As a rally-based drop with some pro-gap. Rally-based drop. This is how this 75 minutes high liquidity zone is created. So inside this, this is a daily high liquidity supply zone. Inside this daily, we have 75 minutes fine-tuned zone. Let's go to the 75 minutes time frame. Here you see in the 75 minutes time frame, we have a drop candle, 1, 2, 3 base candles, and again a drop candle. Within this 75 minutes area, we have a 15-minute zone. So here we have a rally base drop. Within this rally base drop 15-minute zone, we have again a fine-tuned 5-minute zone. Go to the 5 minutes time frame. So here you have a drop base drop. So this is the area we got a trade today. Excellent trade. Prices stayed here for some time. That means you would not have missed this trade at all. I'm sure everybody should have executed this trade. We got it. And what about the target? And today it is quite tricky. The target is not 15-minute zone. Why not 15 minutes? First go to the 15-minute zone. 15 minutes, see the zone structure is not clear. We have a rally candle, we have a drop candle. See how many ways? 1, 2, 3, 4, 5, 6, 7, 8, 9. If you want to go to next 15-minute zone, where is the next 15 minutes? This is not the base candle, this is a drop candle. Failure if you add the hidden body. Probably you have a 15-minute zone somewhere here. So reaching that much during intraday is not practical. Then what could be the target? Go to 75 minutes, you will get clarity. The one I have drawn, this green color one, is a 75-minute zone. Maybe you can consider if this is a failed ERC as a legging, 2 base candles and a rally candle. That is one way. Or other way also you can consider rally, 1, 2, 3, 4 base, 1, 2, 3, 4 base candles and rally candle. Either way you can draw the zone. So 75 minutes could be your target. Obviously, because 75-minute zone came before 15-minute zone. That's why you have to give first priority to 75-minute zone. There is no other option. Generally what happens, 15-minute zones we get before 75. But in this situation, 75-minute zone came before 15-minute zone. And inside this 75, 15-minute structure is not good. But intraday, because we are doing intraday trade. Intraday trade, the 75-minute zone, inside it may not be having proper order flow. Maybe it might be violated in the coming days. But still, at least target point of view, this is a powerful zone. And moreover, till this 75-minute zone, we got 1:, go to 5 minutes, so let me show you. 1:4 RR we are getting. See here, this is the entry, this is the stop buffer value. And till this 75-minute zone, we got 1:4 RR. Till the 75-minute zone. That means we got a very good RR. So we have to exit our trade here once the prices reached here. So that's why I am saying the target is quite tricky identifying. Anyway, you all will learning from these points. All these days you fixed in our mind 15 minutes is our target. But today our 75-minute zone came first before 15 minutes. So that's why 75 minutes zone is even much powerful than 15 minutes. So the moment prices reaches 75 minutes, there is no other way of thinking further. You have to exit and book the profit. Moreover, already good RR we got, 1:4 RR. And ROI is also good. Our average ROI is 6%. This one has given, I think, around 7.5% ROI it has given. Let me open the Excel sheet. See, Max Health. It has given 9,555 rupees profit, which is 7.5% ROI. So it achieved 1:4 RR until 75-minute target demand zone. So this is how from here to here. After that again, see this 75-minute zone pushed the prices up. And here now this fine-tuned 5-minute zone is violated. Maybe, see intraday sometimes it will give you second trade also, right? If anybody would have taken second trade, it could have been stopped out, but that is okay. Because already we got a very good profit. HLQ zone point of view, performance point of view, it did its job. But our trading point of view, intraday, many times fine-tuned zones will support second trades, many times. But today it didn't support. So if you would have taken a second trade, it would have been stopped out. That is the point I should make you remind. So otherwise it's a successful. And next one is Oberoi reality. It's a very bad luck for us. Just a few paisa moved above our stop buffer value, and then again it came down. Otherwise we would have got a very good profit even in Oberoi reality. But even if it is 5 paisa also beyond our stop buffer value, we should consider that as a stopped out trade. So that's why I'm considering Oberoi reality stopped out. So I think around some 60 paisa or something moved beyond our stop buffer and again came back. See here, the blue color line is the stop buffer value. It went a little above and then came down. First of all, what is this zone? This is a 75 minutes high liquidity supply zone. 75 minutes zone. How our software identified this zone? As a drop candle, 1, 2, 3 base candles and then a drop candle. This is how our software identified. And this 75 minute zone we should fine tune with 15 minutes time frame. But unfortunately here there are no proper 15 minute structures. Here you have a drop base drop. This 15 minute zone is the origin for this entire 75 minute zone. This is the origin. That's why many times origins give very good trades for us. Today it is violated, but okay, but otherwise many times lesson 22 concept, lower time frame zone as an origin to the higher time frame is the most powerful. More than 80% success rate those origins given to us so far. Okay, maybe today also it would have given other if the price would not have gone beyond the stop buffer, but it happened today. Okay, so can we take in the 15 minutes? No, you have to take fine-tuned 5 minutes zone. Go to the 5 minutes time frame inside 15 minutes origin. Now look into the origin. Here you have, see, drop base drop, but it is not a convincing leg out. Here failed ERC candle, drop candle. Did you notice this is a failed ERC? So we feel like this zone will be violated. Maybe there are higher chances zone may violate, but we also learned sometimes if 5 minute structures are not very clear, you can go to 3 minutes. Because we learned 3 minutes can be used as supplement. We can't replace 5 minutes with 3 minutes. See, today the 3 minute zone is slightly violated, the zone beyond the stop buffer it went. So that's why 3 minutes is we can take, but quite dangerous. That is what you have to understand. That's why I'm saying it is not the replacement, it is only a supplement. See, 3 minute zone is excellent. We have a drop candle, you have 2 base candles, you have a drop candle. See here prices tested and again came down. Maybe see here prices went deep. Maybe that could be one reason why today it might have violated. We don't know. The reasons could be anything. Here prices went deep inside the zone, almost near to the distal line. It didn't cross the distal line, it didn't touch the distal line, but almost near to the distal. Maybe that could be one reason why it could have been prices pierced and went beyond this stop buffer value. So, but this is the fine-tuned 5 minute zone. This is the area only you have to plan your trade. And today what happened? Prices went into the zone. Some struggle happened near the distal line. Did you notice? Prices came up to here from the, at some point of time the trade looks like a successful trade. Prices came and again sharply moved up, and this time prices even this is also violated, and this is went beyond the stop buffer value. What is our stop buffer value? 1567.05. What is the high of this candle? 1567.80. That means 75 paisa. Beyond the stop buffer value it went and then sharply came down, and see how sharply prices came down. it would have given a very good profit for us today. If this would not have been, prices would not have been gone beyond 75 paisa beyond. But as per the rule, we should be very strict with the stop loss. Please remember, if you did not book your profit here, you know what happens? Maybe today's case is a different case. But many times what happens? Prices will further go up, go up, go up. If you are thinking that prices will come back, you will get huge losses. That's why stop loss we cannot compromise. It is a thumb rule. After crossing the stop loss, it may reach some 75 paisa and come down, or it may go maybe 10 rupees further or 15 rupees further, and it will take all your profits, all your capital. If you don't sell, your capital may be zero also. So that's why stop loss we should strictly implement. You should not think prices will come back. How can you predict? Can we see the future? What is going to happen? We never know. Because prices came back after hitting the stop buffer value, now you are in a position to tell, okay, I would not have booked my loss here. That is how you feel. But what would have happened in case if prices went further up? What you would have done? If you don't book your profit, all our capital would have been gone, right? So that's why stop loss implementation, we should be very strict. We don't bother what is happening after we book the loss. After you book the loss, you should not worry what is going to happen after that. It hit your stop loss, that's it. The moment it hit your stop loss, you have to exit the trade. You should not think about consecutives that happens after that. You should not think about that. Your goal is just to exit, that's it, and book the loss. Only thing we can say, okay, today is bad luck. Why it is bad luck? Because it hit our stop loss and then again prices turned and came down. Rarely you see such kind of incidents. Maybe 10% scenarios. For every 100 situations, maybe 10 times you may see such kind of stocks. But what about remaining 90 times? After hit the stop buffer, prices will be further flying up. It will give even more loss if we don't book the profits. So this is one point you have to understand. So that's why Oberoi reality, how much loss we booked. It is 1750. If you would have taken a trade, your loss could have been maximum loss 1750. And maximum negative ROI could be 1.4%. Why I am saying maximum? Because some people don't accept beyond 1% risk. They might have fine-tuned their entries to 1% level. This is the maximum. But the risk for them is sometimes they will be missing the trades. If you fine-tune the entry too much, what will happen? Advantage you get, risk will be reduced. Okay. But the other side, you will be missing the trades. That is a much bigger disadvantage, right? That's why balanced way we have to fine-tune. Okay, these are the two trades that happened. Actually, third one also happened, but the third one, morning 9:15 candle itself, it opened with gap down. So when it opened with gap down, we don't consider those trades at all. That is the reason why morning 9:15 candle, we don't trade. Because of this gap up, gap downs, the zones will be violated. So what is that? Is it Bajaj Finance? Yes, Bajaj Finance. Bajaj Finance is a 75 minutes demand zone. Something, I think, rally 1, 2, 3, 4, 5, 6. No, something wrong here. Oh, we identified this. Our software. Is it a daily? No, I don't think it is daily. What is that I'm seeing? Sorry, I'm seeing a wrong one. This is the daily old one, I guess. This is the one earlier one, but we have to focus on this. I'm looking into the wrong one. Okay, fine. See here, this is the failed ERC as a rally candle, base candle, and a rally candle. Rally, base, rally. This rally based on the dynamic view, failed ERC candle. Okay, this 75-minute zone we fine-tuned with 15 minutes time frame. So in the 15 minutes, you have this failed ERC as a lagging, 2 base candles, and a rally candle. And within this 15 minutes, fine-tuned with 5 minutes time frame. Here in the 5 minutes time frame, you have a drop candle. You have 2 base candles and a rally candle, the 5-minute zone. Actually, origin is started from here. We can also, risk management point of view, you can draw the zone, but trade plan. But anyway, this is the zone. Fresh zone. It is not tested, but today what happened? See, prices opened with gap down. Morning 9:15 itself. Go to 1 minute candle, you understand better. So this is morning 9:15, 1 minute candle. It opened with gap down. Opened with gap down. Prices went and sharply came down. Everything happened in 1 minute. So because the zone is completely violated, you can't plan any trade in this zone. So even if it, anyway, prices did not enter into the zone today. Even if it enters, that's it. The zone is gone on the morning 9:15. We got the confirmation. That's why we can't plan any trade. So that's why Bajaj Finance, we don't know trades at all. That is the way we consider. You may ask a question, why so easily it is violated today? Maybe institutions might have cancelled their order flow in this zone. Why they cancel? Maybe they have their own calculations. Only we have to ask them why they cancel. So we may not be knowing the reasons. They have their own analysis, they have their own calculations. Maybe they might have identified some other stock having much potential, and they might have changed their portfolio in such a way, took all the order flows and might have diverted to some other stock. See, there could be 100 reasons why institutions cancel their order flows. See, generally they won't cancel order flows for every stock. Rarely we see such kind of stocks. At the time, the zones will be violated with gap up or gap down. It is a demand zone, gap down. If it is a supply zone with gap up, the zones will be violated. That's why as intraday traders, we should be very careful. So this is one of the reasons why we plan our trades only after 9:15 candle, especially intraday trading. Okay, except this remaining zones, we did not get any trade. Look into first one, the daily demand zone. AU Bank, daily demand zone. And this analysis is very tricky analysis. All of you please listen. Maybe it might be some learning for some of you people. First of all, how our software identified rally? 1, 2, 3, 4 base candles and a rally candle. This is the rally. I think our software identified this as a rally. 1, 2 base candles. Medium size candle is also part of the base. And then a rally candle. Rally, 3 base candles, rally. That way we have to understand. Okay, this daily zone is fine-tuned with 75. See here you have a 75-minute zone. We have a drop candle. You have 1, 2, 3, 4 base candles and a rally candle. Dynamic view, it looks like a failed ERC, but dynamic view, it is a rally. Not only dynamic view, if you add the hidden body, look into the previous close, if you add the hidden body, it gets a rally candle, a big rally. Either way, dynamic view point of view, hidden body point of view, either way, this is a rally candle. Okay. And this 75-minute zone, we want to fine tune with 15 minutes. Observe carefully. The 15-minute structure is not really convenient. See, these candles are not base candles. Hide the large candle, you will get clarity. Now you see all these candles. They are large candles. So that's why I have concern in fine tuning the zone. Then immediately what I did, I looked into any zone is there. Here drop base rally is there. Of course, this is also a big candle. But what I did, the order flow, the reason I have took earlier again a drop base rally started from this area. That's why I have drawn drop base rally at type 2 proximal. It's like somewhat compromising and drawing this zone. Maybe we want to see any lower time frame orders will be there here. But this is a failed ERC. Many times when this failed ERC, you may see some horizons for these such kind of zones. Go to 5 minutes. More interestingly, you see, inside 15-minute zone, you don't have any order flows. This drop base rally is there, but this is already violated in this leg out candle. See, leg out candle came up to here. That means this drop base rally is already violated. So you can't consider this. But did you notice there is a big rejection, a failed ERC? Why? Who could be the reason? See here again, a rally base rally. This is the 5-minute zone. This is overlapped again at the distal line of this 15 minutes horizon. That means this 5-minute zone is the horizon to this 15-minute zone, and this 15-minute zone is the horizon for this entire daily zone. See the interesting, right? And moreover, earlier prices came very close to this 15 minutes horizon in this candle. Of course, there is some gap. Only this candle only picked up the orders from the horizon, 5 minutes horizon. So this is the 5 minutes horizon to the 15-minute zone. This 15-minute zone is the horizon to the entire daily zone. So if at all, if we want to plan our trade, it should be at this rally base rally. Maybe if the risk is small, we will add some more entry buffer and we can plan our trade so that the trade may come up to this 75-minute zone distal line near to that. This is how you can plan our trade. So first time maybe you are seeing a zone is having an horizon, that again that horizon is having another horizon. It's like cascading effect. Okay, this is AU Bank. Anyway, today prices did not enter into this zone. Next one is Dabar. Dabar is a daily zone. We didn't plan any trade because it is a 2020 zone. Once prices entered, that is also 2022. There also we don't have 5 minutes data, just left the zone. Anyway, prices also did not enter into this. Max Health, we already got a good profit. We discussed Max Health already. Next one is PEL. PEL is having a 75-minute zone. Today prices entered into this. This is also a daily. Yesterday we discussed PEL. This drop, 2 base candles and drop. Yesterday we discussed this zone is not having any fine-tuned zones. Go to 75 minutes, you will see. There is no proper 75-minute structure. We can't consider this as a base candle. It is a failed ERC. And again, this is failed ERC. In between, no base candles. So that's why yesterday we thought this structure is not good. It's not a convincing structure. I told you yesterday maybe this zone will be violated next time. But today, see, prices closed inside the zone. Maybe next tomorrow or day after tomorrow, prices may further go up and this zone will be violated. Or another possibility is there. Institutions create a new supply at 75-minute zone and push the prices down. That is having a fine-tuned 5-minute zone. Next time we get trade opportunity, but definitely not this time. So that's why today we didn't plan any trades in this zone, as we already discussed yesterday in the HLQ analysis video. Next one is Axis Bank. This is a 75 minutes demand zone. How our software identified as a rally, 1, 2, 3 base candles and a rally candle. See, previously when Monday, today Wednesday, right? Monday prices entered into this zone. At the time it created a new order flow here. Go to 15 minutes time frame. 15 minutes here the order flow is not really good. The failed ERC rally, in between no base candles. But here we have an order flow. See, we have a drop base rally, 15-minute zone. Within the 15-minute zone, we have an excellent 5 minutes fine-tuned zone. So here you have a failed ERC candle as a rally leg-in candle, 2 base candles and a rally candle. This is the way you can draw the fine-tuned 5-minute zone. But today prices did not enter into this zone. We did not get any trade opportunity here. And Bajaj Finance, we discussed, that is the one gone with gap down, and Obra Reality, this is a bad luck for us. And it is topped out, and immediately it again prices came down. Because it is hit the stop buffer value, we have to book our loss. So that way, today we got one excellent trade from Max Health and Obra Reality. I am sure many of you would not have taken Obra Reality. The reason is, if you would have taken a Max Health, when you are in the trade, after 5 minutes or 10 minutes, then only prices entered into Obra Reality. By this time, you might be already in Max Health. Suppose if anybody having some funds and you planned both the trades, probably this one would have been stopped out, and here you would have got profit. If anybody ignored Max Health completely and took Obra Reality trade, you are an unlucky person today. Bad luck. Okay. But anyway, this is the best one. I am hoping that everybody would have taken this trade, because prices stayed in this zone for almost 10 minutes or even more. Max Health. That's why there is no question of missing the trade for Max Health today. Got excellent profit. Even if you booked at 1:3 RR, still you would have got around maybe around 5% ROI you would have captured. Okay. So this is about HLQ zone analysis. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.